Hello, Jim here. Today I've got three companies for you. They're all bargains right now. They're oversold and at great prices. Plus, two of them are dividend aristocrats, and the third one is a dividend achiever. When you pair these with selling puts, it's amazing the amount of cash flow you can pull in from them. So I'm going to talk about each one. I'm going to share with you the most recent trade I did on each and why I like them so much. So stay tuned. I think it's going to be well worth your time. Okay, the first company I want to talk about is Target. It is a dividend aristocrat. It's right near its all-time low. 88.30 is its all-time low, or 52-week low. It's currently 89.03. If you go out 5 years, you can see it's hit a multi-year low. So I think it's pretty close to the bottom. I'd be surprised if it got into the 60s or 70s, but it might. You never know. It could go lower, but it's currently paying a 5.12 dividend. The earnings per share is 734 with a PE of 12. I won't go into everything, but earnings was on 820, so they next have earnings on 1119. Dividends here you can see it's got B plus for safety, B minus for growth, A for yield, and then dividend consistency. And you can see they've been paying growing dividends for 56 years. Their 5-year growth rate is 11.09, which is really high. They have a good payout ratio of just under 60% for a massive company like Target. That's really good. I do like to look at financials, so I'll look at the balance sheet. I'll come down here. I'm curious if they're buying shares back. I believe they are. So, yeah, 454, so down a little bit, down a little bit. They did increase, but they did decrease. So they're buying back some, not a huge amount. Valuation looks good, A minus. I mean, their forward PE is 11, just shy of 12. The sector medium is closer to 1650. So everything I want to see growth, they don't have much growth. They're growth wise not so good. Profitability is typically pretty good. I really like to look at cash flow. Margins could be a little bit better. But definitely, I think heading in the right direction. So let's kind of look at earnings and earnings estimates. Let's see where they're going. So they did have a drop. Then in 27, they're going pretty close to $8 for earnings per share, then 843, then 926. And you can see the PE would be going down and down, or the forward PE. So all those things I like to see. If I come over to the Bollinger Band, you can see it's right near the bottom. So if you can trade in this 80 to 85 area, it's a really good area. And you can see their RSI is just recently gone positive, or not positive, but it's right around 34, 35. So they're definitely oversold. So the latest trade I did on them, and you can see it here, I rolled it, but I originally set it up. I sold two vertical put credit spreads with them at 90 and 80. And I brought in $263. I believe it was right around a 25-30 delta. So I did take a little bit more risk, but again, my cost basis currently would be, if they were assigned to me, it's like an 88.50 or something along those lines, or 88.70. Then I rolled them again just recently, back on September 12th, and brought in another 263. So my cost basis would be closer to 87, 80, maybe a little bit more than 87. Plus if the market dove and they got assigned to me, I would probably sell the puts and keep them and pick them up probably around 85, which I think is a fair price. We go back over here and we look at 85, you're talking, it would be right a little bit lower. Actually, it may be better for the Bollinger Band. Let's look at the Bollinger Band. So where would 85 be? It would be right around here. So right at the very bottom, a little bit below the Bollinger Band, or the very tip of the bottom of the Bollinger Band. So overall, a good company. They have fairly good options premium. So I like them. I like dividend payers. I do think at some point they're probably going to rebound and may end up maybe back over 100. I wouldn't be surprised. But if they get some good news and they start kind of turning things around, they could be back in the hundreds pretty quickly. So that's the first company I wanted to talk about. Next, we'll talk about Clorox. Again, another one of those companies I really like. So hold on, let's jump into Clorox. Okay, now I do like Clorox. There is a little bit of a warning related to their quant, which is primarily related to growth and their momentum. But I still like them. They're now paying over a 4% dividend. Their PE is right around 20. Their earnings per share is $6. And they too, a lot like Target, they're near their all-time low. If you go back 5 years. So I believe they're probably pretty close to their low. They may drop a little bit more, but I think long term it could be a really good investment at this time. Again, you've got all A's and B's. They've been 47 years of dividend growth, so they're also a dividend aristocrat. A pretty good payout ratio. I'd rather it be a little bit lower, but 63% isn't bad. They're growing around 2.69%. So not bad. Profitability, A. Their cash from operations looks good. They do make a lot per employee, over 106,000 per employee. Growth is where they're struggling a little bit, but I do think, they're kind of like the Coca-Colas and the Procter and Gambles. They steadily grow, but not very quickly. Valuation is a C. Capital structure, compared to their market cap, they have around just shy of $3 billion in debt, which isn't bad. I'd rather them have a bit more cash. Earnings estimates we can see here. So they also had a pretty big drop, but then they're going to rebound, and it looks like by 2030 they're going to be doing $8.60 a share compared to right around $6 now. So they're going to grow over time. They did really well during COVID, which kind of makes sense, being that they're a chemical cleaning company. Financials, let's see if they're buying back shares. Got to go all the way to the supplemental. So 122, slightly. They've stayed pretty steady, 123.2. So they've stayed pretty steady with the outstanding shares. They have come down about 3 million shares since, 2019? If we look at their Bollinger Band, so they're right here at 120. So if you can pick them up around 115, 110 in this area at the bottom of their Bollinger Band, plus their RSI is low, meaning they're a bit oversold. And if we look at the recent trades I did on them, so here I saw two vertical put credit spreads on Clorox with strikes to 110 and 100. Annualized return 73%. So let's look 110, 100. It's right here. So well below the band, which, could it get down that low? It could. But I brought in 223, which is what I typically like to do. I've done trades on them before. So I believe I've always closed them early. I don't own any shares, but I would not mind owning them. I typically don't trade in anything that I don't want to own. If you're curious, this is Patreon. This is what I share with my members. I posted here. I also show the trade and what it looks like within, in this case, Fidelity. If it's Schwab, it'll be a printout of Schwab. And then I paste it into Discord, and then I do updates, right after I make the trade. I'll post it here, then the Discord. And then there's other channels. There's channels where members will share, they might take this trade and do slightly different. They might, just sell it as a cash secure put, maybe go a little bit lower. I always encourage my members to change the trade, make it better. And if they do make it better, then to share with the membership. So Clorox, like I said, I've traded it before. This one is due to expire in 11/21. What's its current price? Let's go back up here. So it's pretty low. I can't talk. 123.19. So it's still pretty far outside the money. 110. And I believe it's like 30-40% profitable. So if they jump another couple of dollars, I get into the near 130. I probably will be able to close this early, and that's what my goal is. If I can't own these fairly quickly, then I want to close it at like 70 to 80% and make another trade pretty quickly. So that's Clorox. I have one more, so stay tuned. Let's jump into the next company, which is UPS. Okay, so the last company is UPS. It's not a dividend aristocrat. It's a dividend achiever, which I can't remember the specifics for that, but they've also, right now they're paying kind of a crazy dividend because the stock price has come down so much. It's pretty close to its 52-week low. It's currently 86.78, so it's just slightly above the 52-week low. If you go out 5 years, you can see it's just been hammered. I mean, it wasn't too long ago. It was over 200. They've made some missteps, but I think they're pretty near the low. I would not be surprised to see them kind of trend back up, maybe towards 100 over the coming months. If we look at their profitability, kind of like the others, A plus, they bring in a ton of cash flow, which is what I really like to see. Their margins could be better, but overall, their profitability looks really good. Their growth is slow. Again, most of these companies are big, giant value companies with these kind of dividends. Valuation is A minus, so I mean a really low forward PE. I mean 11.49 versus the sector average is 21, as you can see here. And they seem to be making some improvements. Now, again, all A's and B's for dividends. Now, their payout ratio is a little concerning. It is kind of high, 86.62. I don't think they're going to cut their dividend. My guess is they'll stop increasing it. They'll do like what Coca-Cola's done. They'll do really small increases, and this will go up. This will drop to like 84 and then low 80s and probably high 70s. But right now, a dividend yield of 8% or 7.56. So, not 8%, but pretty close to 7.6%. And then the annual payout is 656. So again, I'd rather have this payout ratio a lot lower, but they've been increasing for 15 years and they've been increasing at a big pace. That's why I think they have so much cash flow that they have a lot of cash flow to cover the dividend. Other things to look at, let's look at earnings and where they're projected to be. So 651, again, like a lot of the other companies we've been looking at, dropped a bit. Then they're going to go to 718 and 26, then 808, which is like a 12% increase. And then 28, 968, almost a 20%. But that's actually, it looks like a little bit of a decrease. 808 to 968. Oh yeah, and then it drops to 896, then to 831. So they're gonna, especially into 2028, looks like they're gonna get some pretty good increases. They're almost gonna double their earning from 651 to over $10, almost 10.50. So even though they're not growing very quickly, the growth is relatively slow. They are making some savings cost-wise. Let's look at their buying back shares. We'll come back down here to the supplemental, 847. So they went from 54 to 47. They went from 52 to 54, so they went up that year. But then previous year, they went down because they went from 858 or almost 859 to 852, and the year before that it was 870. So they've been buying back shares. So back in 19 they were 880 and they're at 847. So they're buying back, not consistently, but they are definitely buying back shares. And then let's look at their Bollinger Band, similar situation. So this is where they currently are. What's their current price? 86.78. So their current price is right here. So if you can pick them up, around 80, you're getting near that low Bollinger Band. And again, the RSI is in the 30s. So, I believe they're oversold. If you can trade in this area down towards the lower part of the Bollinger Band, you'd be sitting pretty. So here's the trade I did. I did this only 3 days ago. So I did an 85.80 expiring on 10/17, and it was like 194 in premiums, an annualized return of 140%. So, and it's a thinner spread, only a $5 spread. So my cost basis at this point would be pretty close to 84, and this was rolling. So this was not my initial trade. If I go back to the initial trade, I did 260, sold 2 vertical put credit spreads back in August 27th, 85 and 80. And then this must be 1121. I must have put a mistake in. This should be 1120. Oh yeah, out to 1121. And then, so on the original 260, and then the second one, so that's 460 or right around 460, so 230. So if it gets assigned to me, my cost basis would be like around 82, 83, and then I could sell the 80, and then I'd pick these shares up right around $80. I currently own some UPS, but I wouldn't mind picking up some more, especially at that dividend. Even if they did cut that dividend, it would look really good. If you can bring in 4 to 5% in a dividend, and then you sell covered calls, and these companies are a lot easier to sell covered calls. You don't get the crazy momentum moves like you do with, some of these AI-based companies like Palantir and NVIDIA. It doesn't mean they don't at times jump around a bit, but like Coca-Cola, UPS, these 3 companies, Clorox and Target, should be fairly easy to sell covered calls. It would be hard to double a 7%, over a 7% dividend, but you could probably get 5 or 6. So you're already at like 12 to 13% just selling safe covered calls. And that's the case with any of these companies. I talk about it a lot in my membership, that it's not unreasonable to try to double your dividends when you're selling covered calls, especially on these value companies that pay big dividends. Like I said before, they don't move that much. And then over time, with the fact that so many of these are been hammered lately, I do think they're going to potentially, I could see like UPS getting into the hundreds. And if it got some momentum, it might get back to the 150s. So I think all 3 of these companies are good choices for making trades. They're currently, most of them don't have earnings too soon. Like we've got earnings here, 1028. So that's something you do need to keep an eye on. But with the price so low, I don't worry as much about earnings. If I can own UPS, Clorox, and Target, at their all-time lows, my guess is one day I'll look back and it would have done so much better. So that's what I wanted to share with you guys. Let me know what you think. Are there any other companies like this that have been beaten down, that pay good dividends, that are really good long-term holds? Something you might want to have the rest of your life, kind of like me with my Coca-Cola, my Procter & Gamble, my Southern Company, my Con Edison. Let me know some other names, maybe even some ETFs. And as always, just wanted to take a minute and thank you guys for watching. I hope you have a wonderful rest of your day.